been quite a busy week. Ever since getting that promotion, moving from money market to bonds, and now you look at fixed income from a global perspective, international bonds, international markets, because everything is in relation to how it affects our currency and our yields. And we know that last week was quite a busy week. This week as well, with the MPC taking place, the inflation rate.
Welcome to another episode of the Business Agenda podcast. As always, for first-time listeners, you can find this podcast on Spotify, SoundCloud, YouTube, and any other audio platform where you get your podcasts. We've gone live with our YouTube channel, so please do like, comment, subscribe, click the bell notification icon, and obviously share within your circles. My name is Cash. This is a business and all things business-related podcast. For our listeners from previous podcasts, Property Corner, you'll be familiar with No Hidden Agenda. So No Hidden Agenda Media giving you the Business Agenda podcast. The team is myself, Itumeleng Majaki, known as Miza. Got my friend Teaser, a.k.a. Vine_T, for his socials. That's what he goes by. And as
man. I'm sticking to that name, Chief.
Yeah.
Vinyl T.
Vinyl T. There's a story behind that.
It's gonna be funny one day getting that article.
There's a whole history.
There's a whole history behind the breakdown.
We're gonna get an article from these publications. Trying to write all our names in full.
Exactly.
Vinyl T.
At least mine is simple. It's just Zito, you know.
Yeah, exactly. It's always funny when you have like people when they profile, it was your first name, the nickname in the middle, then the last name, and then it's like, so tell us the Vine_T. This is quite interesting. Elaborate on. Would you care to elaborate on that? Like now, we can proceed. Otherwise, so as always, gentlemen, how was your week? Obviously, always like to check in on the team, see how you guys are doing.
Yeah, man, it's been a good week for me personally, but I really wanted to say thank you to everybody that's actually listened to our drop this week. I think we went live.
Yes.
The love was amazing. It makes me happy. I don't know about you guys, but it really makes me happy to see this out, to see us actually executing this. And being able to put it in the platforms we really wanted to put it on, you know what I mean? So shout out to Tepa again for that. And thank you so much for joining us, bro. That shit is fly.
Yeah, I definitely like the people. It was a really great week, getting like so much kudos from people in terms of really loving the visuals, the way it's formatted and packaged. Obviously for me, once the simple manner which Tepa requested the logo and quickly added it to the visual. So like, yep. Business Agenda podcast, look out for more things in terms of
Jukes was everybody listens. He sends me a message. He's like, does this mean we're gonna have to buy new t-shirts and new jerseys?
Yes,
like,
of course.
Yes, of course.
Definitely.
And it's winter. We're gonna have sweaters.
Yeah.
You had to buy No Hidden Agenda merch. Now you have to buy Business Agenda. Yes. No Hidden Agenda gave you your casual attire, golf shirts, mugs, and all those good things for your corporate. When you're playing golf, wear a Business Agenda golf shirt. Yeah, so gents, I think obviously in line with this week with the announcements, the rate hike, this episode obviously we wanted to focus on not just only that, but I think the overarching theme of what we'd like to unpack is just the value of money.
Yes, sir, man. It's sad, or maybe I guess it's our reality. Being a South African at this point is very difficult, and I think it's critical that we maybe discuss this. Especially after this week, with the 50 basis points increase, we hadn't had a huge increase like this in a while. Inflation is all the way up, unemployment is all the way up. There's so many things that are just very difficult, and I thought maybe it's important that we kind of maybe remind people, your money is actually losing value, and I suppose you may want to think about how you do certain things. Just because of what is headline inflation now? 5.9.
5.9. Just
right.
Before we touch on that, my week as well.
Oh yes.
You guys skipped me. You guys know. Everybody knows that I'm in asset management, fixed income, and it's been quite a busy week. Ever since getting that promotion, moving from money market to bonds, and now you look at fixed income from a global perspective, international bonds, international markets, because everything is in relation to how it affects our currency and our yields. And we know that last week was quite a busy week. This week as well, with the MPC taking place, the inflation rate coming in line as expected. Maybe if you guys want us to dive deep into that, we'll dive deep into that.
Yeah, because I was gonna say, Zito, maybe for context to a lot of people, when I say your money is losing value, I think inflation is 5.9, say 6% right now, an average increase in everything.
Yeah.
But the real inflation is your petrol is higher than 6%.
Yeah.
Food is higher than 6%. I mean, we keep seeing people complain about the price of oil.
Yeah.
That's all the way to the roof.
It goes back to what we discussed. Like, I mean, like there was a whole debate in the market, even with us personally as friends, that was the 50 basis point justified or not. You know, like the subs target is what, 4.5, right? Which is the midpoint, what they describe as the midpoint.
Correct.
But the inflation targeting is between 3 to 6.
Yeah.
But like now, once inflation starts to go to the upper band, they start getting worried. So fundamentally, they have to be more aggressive with hikes. So fundamentally, hiking by more than 25%, more than 25 basis points is justified to protect prices and to protect the currency, because we are more of an importing country. But like morally, if personally, like, I mean, like, you're already the middle class, we are bleeding, hey? Like Tisa just mentioned.
Oh, you saw FMB's thing saying you spend 80% of our money within 5 days.
You know?
That's statistical.
It's true, guys, because like if you look at the price of bread this year compared to 2 years ago, the price of bread compared to last year, price of milk, petrol is going up. Petrol went up, and these are the effects of the war and whatever. Some of them might be, economists might call them base effects, but some of them it's external effects.
Correct. Yeah, you couldn't predict some of it.
You know,
what I mean? Yeah.
so we might feel like Tisa said something very important when we were debating during the week. Yes, the Reserve Bank needs to hike more than 50 basis points, yes, but like now retailers need to come through.
Yeah,
they
maybe
need to cut prices.
Yeah. So maybe let's explain it, and it's probably it sucks, but I remember when we were in our economics class learning about demand and supply and all that, and we actually never used to think about it, how this will eventually mean to our lives. But it's a very theoretical process that the Reserve Bank is doing. So what usually happens is, if prices are going up because people are increasing everything,
Exactly.
petrol is up, clothing is up, food is up, everything is going up because no one is actually reducing prices. So what the Reserve Bank does to curb that is to increase the cost of borrowing money.
Exactly.
Because all of us actually spend on credit, most of us, So if you don't have access to credit, it means you can't buy everything that you used to buy, right? And then what will happen is the person that's actually selling you clothes, let's say petrol, for instance, let's say filling station down the road, they used to sell 300,000 liters a month. Now petrol is up. We no longer have enough money, blah, blah, blah. What me and you do is we no longer go out as much as we should. So now they're going to move from selling 300,000 liters a month to 250. So that means he's sitting on too much fuel on his hands. So now to get me to spend, he's got to then find ways to actually come to me and say, you need to buy this. And what you're going to see is retailers are going to do that. You're going to see specials. You're going to see packages. They're going to find ways to still get you to spend, because unfortunately, if you don't have, you can't spend if you don't have. So the Reserve Bank is increasing that cost so that we all don't spend.
Yeah.
Then the retailers or suppliers or market will effectively follow suit. And it's all theoretical, in thinking that you're gonna start seeing prices come down. Inflation will also come down below 6%.
You know what it goes back to? You know what this topic goes back to? It goes back to when we're in pandemic levels and we had those 3%, 300 basis point cuts.
Correct.
And then agents or maybe external people were advising people to start buying houses because it's cheaper, because financing is cheaper. But like now, the way we look at it now in fixed income terms is that everything just needs to normalize. So one of the things that I've learned that my boss taught me as a PM when he trained me to become a PM is to always have a scenario analysis.
Correct. Yeah.
I remember when I was buying my house now, I moved into my house recently and I told Teaser, I was doing scenario analysis of Teaser. We're sitting in my flat and we're doing scenario analysis. I'm like, Teaser, I'm working on Prime. Yes, I might get Prime minus whatever, but I'm working on Prime. I'm assuming that I'll get Prime. And then should interest, I know back then as a money market guy, I knew that interest rate hikes are going to be aggressive. So already, me personally, I'm sitting there on that Property 24 calculator, and I'm pricing in hikes.
Yeah.
To see like
The effect.
You
The
stress
effect.
test it yourself. Yeah.
the effect. You know, like we were talking with my wife recently. Like the increase that I got was just
Shoo. You're packaging it all in one.
no wait.
Yes.
That was just I don't mean to be pompous, but
No, don't worry. It's just joking. Yeah.
that was just lucky. But like initially, what we did, Tiza was there from the get go. Like we were doing scenario analysis. My point is that I think the onus is on us as investors, as consumers. Interest rates are going up. Interest rates, like now there are talks of recession in US and Europe.
Yeah.
And
correct.
interest rate might go down again. Borrowing costs are going to go down again. But like the onus is on us as individuals, consumers, investors to do our own little scenario analysis to say, can I afford this when interest rates normalize again?
Yeah, so maybe let's bring the bad news right there.
Yeah.
We're still expecting another 75 basis points
Another 75 basis points.
by
yeah.
December. So by December, you're going to find it could be that Prime will probably be sitting at 9%.
Yeah.
You know what I mean? This is in line with what it was before COVID.
Because normalization is back to prime going back to 10.
Correct. Yeah.
That's
so,
normal.
So unfortunately, maybe like brace yourself for that. Interest rates are going up, and again, maybe because I know a lot of people ask why they're going up. You know, it's because prices of everything is going up. So then they have to increase the cost of borrowing so that you don't have access to credit. If you don't have access to credit, you don't spend as much, and if you don't spend as much,
Curbs inflation.
we should see
some
price reductions. You know, and also like quite interesting. I just actually want to also state, you know, the Reserve Bank actually increased interest rates very early last year in December with the first 25 basis points, and then they did again in Jan, and then they did again in March, which we don't often talk about, but they actually reacted in time. Because in America, they're not increasing by 25 basis points.
They're doing 50. Yeah.
So it's like 50 Jan, 50 March, 50.
And the members are arguing for 75.
Correct. So with
HMBC,
us, we acted early enough.
So it was a conservative.
So then it becomes staggered. You know, they're building it and building it, and of course, I mean, as a consumer, it's very painful to us. But I guess what we're trying to explain is there's a process and there's a thinking that these people they're following at the back of trying to maintain the economy as we know it. And sometimes they have to make these calls. It is what it is. You know, unfortunately, for all of us is that, you know, we can't do much about prices. You know, if you literally like have to go buy food, you're like, this is ridiculous.
Yeah.
But there's nothing you can do. So
Or you can just complain.
So the Reserve Bank is trying to help by increasing costs, and then cost will lead to retailers, etc., to reducing those. And hopefully in the long term that will happen. And when that happens, we will maybe provide that context. That, do you remember when they were making these decisions 3 years ago? They were trying to get to this point.
And in simple terms, what you're saying, somebody would ask themselves, why is the Reserve Bank actually increasing rates? The mandate is price stability. When we talk about price stability, we're talking about the exchange rate. So they're protecting the exchange rate. They know that we are importing a lot of this stuff.
Correct. Yeah.
For you to have something that's in your shop, it filters down to the rand. So if the rand is weak, it's going to cost you more
to import.
to import and to buy that thing as a retailer.
Yeah.
So to protect you, they need to hike interest rate, and it filters down to
Everybody.
to the rand. So those who studied economics or basic economics, they'll let you know it's called the monetary policy transmission mechanism. That's why you heard when the governor was talking, he touched on growth.
Yes.
He touched on the unemployment rate. It's a channel.
Yeah.
All these things is a channel.
Can I
I think-
actually ask you something interesting? When he was explaining the reasons for the increase, he also touched on climate control.
Exactly.
And for many years, we all never actually took into account climate control into
Economics.
the economics.
Yeah.
You know, the flooding that happened in KZN has affected everything at this point. And I had to go back a couple of years just to remember, like in 2007 to 2018, 17, somewhere there was a time where there was no water in Cape Town. And
I remember, yeah.
And then in 2014 there was a general, a drought in the country. Farmers were bleeding.
That's what hurt Land Bank. That's why
Correct.
now they start looking.
Yes.
It took the knock-on effect of the drought.
So
Land Bank was predominantly affected by drought.
yeah, so I wonder, like, when you guys do
And
your
farmers not paying back money or whatever.
yeah, when you do your models, not a lot of people actually factor in climate control because I guess there isn't enough data to predict it and to, but it's one of those things that's maybe telling us that, it's about time. I think everybody talks about climate control. We don't realize it, but it's actually starting to affect us real life, The conversations that are also happening in the background from a logistic perspective is, some other companies, they are starting to think, should their distribution centers be in Durban?
yeah.
If Durban has high risk of climate control, you still have Richards Bay, you have PE, you have Cape Town.
In
So
close
now,
proximity, yeah.
so now people are thinking, should we maybe repurpose where our distribution centers are, because there's an inherent risk with climate control, and maybe KZN specifically speaking.
Yeah,
You know-
the other thing I want to say in terms of what Miza said earlier about just the process overall, because one thing you see in a lot, especially on socials, does this committee even meet? There's that sentiment, because the people are going to feel the pinch, how life is hard right now, money's losing value, like we're saying with this whole episode. So there was a question like, do these guys just make these decisions on the whims? And you're like, no, definitely not. It's actually the total opposite. The forecast, and even for the governor and his team, the committee, I think there was only one person on the team who decided he wanted 25 basis points.
Yes.
The rest unanimously said 50. You see now, so
That person probably felt all of us.
exactly.
I'm morally correct.
Yes, morally correct. Let it be shown on the record. I
Morally.
I took the moral decision.
Fundamentally, but morally.
Yeah, because and the point I just wanted to highlight with what Miza did say earlier, that look, it's a tough for any reserve bank of any country. It's a tough juggling decision, because what you do find is we've seen, for those who study historical economics, there's sometimes where governors of any country have kind of not overreached, but tried maybe too hard in terms of the mechanisms to rein in inflation and spending and currency control. But what you do find eventually, sometimes these things will catch up to realistically where they're supposed to be. And then the effect at that time is you have a spillover. Maybe a currency overnight loses real value. Like sometimes you have a change of government in a certain country, and then they come in and say, right, what we want to do is now we want our currency to be at its actual value, not the one that was before. And then we start rebuilding, we start addressing inflation. So I think we're gonna feel the pinch. But to my main other point was, what I did like Miza's house example is, we can't control prices as people, but what we can proactively do, like, excuse the cliche phrase, but it's always belt tightening for the consumers, but it's literally exactly that. So what you find is sometimes you might have to, simple things like looking at your expenses as a consumer. You're not, like Tisa said, you're not going to go out as much. And then if you really feel the pinch, you might even scrutinize right down to your streaming packages. Okay, do I need DSTV Premium? Do I switch to a Netflix and get a Disney Plus that's just launched in every single area? Because
It goes back to that scenario analysis.
Yeah, exactly.
We
So
need
it's-
to do that scenario.
you have to do it,
analysis.
because
Yeah,
even
yeah.
what's really, especially now with the interest rates, it affects now maybe the interest you're paying on your bond or your car. And then people, I think COVID put a lot of people in that forced positions where they were almost forced into really looking at their living expenses, just your income. Are you a single person? What is your household setup? So I think I was just trying to give a layman's perspective, say, look, these guys, they don't just take these decisions on the fly, because obviously there's long-term effects, but it's a tough balancing act when on one side South Africa imports a lot of raw materials, a lot of finished goods. They are marked up and then sold to us, the consumers. So if the rand takes a knock, the prices go up. Then you have the war, which is affecting prices of coal, which went from 70 to 300 US dollar,
Correct, yeah.
which is like a huge surge. So they're trying to, it's all these things that they're trying to keep in check, whilst obviously bringing retailers to the party where at some point they don't want inflation to be run away, but the 3 to 6 target is on the high end, like Miza said, because there's just now so many facets that you're trying to, local and abroad. America's headed to a recession, like Miza saying. So for the business and just the how South Africa interacts with the rest of the international economy, that all then ties in. And then obviously you can't control the price as a consumer, but start looking at all your financials, your expenses, and see, okay, look, where is there leeway to rein in? Just to cut it in.
Yeah. So maybe to before we maybe move on to another topic, I just quickly want to state, I guess we also never thought about it, but if you actually have your money in unit trusts, in ETFs and all these packages, it's also actually losing value. You know, when you look at a fact sheet, which usually has returns of what this thing does, is now most of them are probably negative, because equities market is actually being hit hard.
Biggest winners are pension funds.
Yeah, correct. Even your pension is losing money, if you care enough to look. So I thought what was interesting for me, and maybe just to quickly ask you guys, we don't have to stay too long on this, but it's quite interesting for me. I can't believe that we're actually getting to a point that when you invest your money into something, you now actually have to ask yourself, what is the philosophy of the person investing for me?
Exactly.
Because what we're finding is, you have big names, your Ellen Grays, you have all these big names that we trust so much because they have experience, but their performance is not there.
It's not great.
Yeah.
It's not great.
So just to answer you, and just to wrap up the previous topic that you raised with regards to why the governor was talking about the environment.
Oh yes.
So in conclusion, just to close off that, there's a new philosophy that's coming to the market called ESG.
Oh yes.
Yeah, ESG is most important, and it's affecting.
Say it, what it's short for.
Yeah, environmental, social, and governance. So every manager has to look at those. How does you investing into a certain stock or whatever,
Any
SOE, whatever,
Any
and
vehicle.
then what's the ESG score?
Correct.
So now even the Reserve Bank is starting to employ ESG as well, because the entire market is employing ESG. Are we whatever we are investing in, how does it affect the environment? How does it affect the social environment? How does it affect governance in general?
Yeah, in property as well, it's there. I mean, I remember the article you sent me, Cash. But in property, what we're doing also is a building that's energy efficient kind of gets valued more.
Yeah.
So you'll see,
Exactly,
if at night lights switched off themselves, escalators stop working because there's no people, that motion detector, it all saves energy. All of that stuff is coming in real life to decision makers of finance, reserve bank,
construction,
asset management. So it's quite interesting.
So basically, investment philosophy is changing. It's basically transforming.
So that's why then I wanted to ask you, because do you think that the asset managers that are sitting behind some of these funds that we invest in, you probably now have to kind of get what is their philosophy, because unfortunately, like when you look at an ETF, it's a basket of shares. They put them together in a basket, but all of them used to invest in the same stuff, like Tesla.
How diversified is the ETF now?
Yes, and all of that is all being hit hard. So you now gotta actually try and understand the person that you trust with your money are investing in the right things.
And then it goes back to that thing again. Are they investing in the right thing? And morally, are they transforming to ESG? There's an article that came out last night about Alex Forbes wanting to transform the asset management or investment industry, where they want asset managers now to have 40% black women, 40% black people.
Yes.
So it goes back to it's a very legit question. The people people that we are investing in, like if you have a unit trust, retirement annuity with the big companies, your Sanlams, whatever, you get a fact sheet. Your asset managers there, are they conforming to ESG? Are they conforming to BEE? Are they conforming to transformation in general? Do these people have your best interest at heart?
Yeah. And I think also it's a very good question, because now, I like the fact that you started with the guys we used to normally trust with. The ones, your go-to names, there's just
Sanlam,
the
Old Mutual,
Ellen Gray, Coronation, all of them. But
still one sponsorship, but yeah.
But we're still gonna probe and critique, obviously, light jabs. But I think Miles is making a good point that I think at every individual level, it's no longer just. I think with money losing its value, a lot is just now beyond just the investment perspective of just want the best returns. You now need to look beyond just that as an investor. You look at the philosophy of not even just the fund manager. You look at the broker you're assigned to. If you have access to ask him personally, like over and above the firm you work for, what is your philosophy? What is your track record in terms of investment? Or just probe and ask the questions. Look, even if you ask them, like Maza said rightfully, in terms of your BE or affirmative action, like if Alexander Forbes, if you are going to get similar returns from one asset manager to the other, ask him, if I go to Alexander Forbes, who are intentionally fast forwarding transformation, why would I invest with you as X and so and so investment company? Over and above, what are you doing different? Because we're being twisted in terms of money losing value, in terms of having to really scrutinize. Like Tisa rightly said, for the longest time, didn't think so much about the environment, but now over and above the market, the Reserve Bank is looking at. You mentioned the abbreviation is what? ESG.
ESG,
It's economic. It's also the climate. It's social things we never thought were fundamental. You now need to consider those over and above, because long term, we've seen now within a short space of time globally, things can change overnight. So the value of the rand, the value of the US dollar, I never thought in my lifetime I'll see so much inflation or recession or just releasing of funds by the US Fed in America. But here we are. I came up when we did economics in high school, in varsity, it was the days of Al Greenspan, and there was just that level of stability, but to go for that far back.
The recession guys.
The guys who had it in their blood. But now if you look, you just never thought you'd see such runaway inflation or within like so many recessions abroad. And I think now a lot of things happen in markets globally that the trickle-down effect it's always been real time, but now it's really hitting the average South African and the average person, because
I like Cash mentioned that the trickle-down effect.
Yeah.
You see that thing? That's ultimately we suffer.
Yeah. For the
That
average
trickle-down
person,
effect, it comes down.
which you need to be. So the long and short of what I'm saying is that Maya's making a good point. If the only thing you can really control with your investment decisions is one, what can you do if prices are going up? How do I tighten my belt? And second, if I'm going to invest, you need to thoroughly do more diligence and scrutinize who you're investing your money with, because just the standard spreadsheet and portfolio from all the go-to investors is no longer going to cut it. You need to ask more probing questions, because the assumption is we all work hard for our money.
Yeah.
The money's losing value.
And most people didn't know that they could ask.
That's the other thing, because I think it's almost assumed like it's.
You just trust them.
You trust them.
It's a big company. They've been here for many years. You kind of think
they've got the track record. If they are the go-tos, and I think with a lot of with the asset and fund managers, if you look at just their brand positioning, you see them on all the talk shows and everything. So they're trusted names if they partner with certain people.
And unfortunately, that's the thing with money, and it's reputational risk.
Yeah.
Like a lot of guys, like the big guys, are just focused on their reputation because they've got the track record. I tell Tiz all the time, we beat, not I, but the team at Balondolozi. We beat the big guys by far. But
Thank
we
you
don't
for
have
the space.
Yeah, thank you for the space bundle.
Balondolozi. Yeah. Thanks for this.
So I was gonna say,
true.
I mean, I think also, the other side of the conversation that most people do is, I guess now you gotta have multiple sources of income, blah blah blah, because just the salary is just not enough, and how other people do decide to actually make more money is to invest. So I thought it might be worthwhile for us to maybe discuss that profile of the investors. If you start a business, it makes sense. You more risk. You like risk. High risk, high returns, etc. But most people already have jobs. They don't have a lot of time to start businesses. So the best thing that they do is to invest, and they can either invest in shares, equities, etc. So I thought maybe it might be worthwhile because we're gonna have a series of episodes where we're gonna discuss a couple of things like cryptocurrencies, NFTs, music NFTs, etc., etc. So and I thought before we get to that, it might be worthwhile for us to maybe, discuss that. There's for me high level. There's two types of investors really. There's guys that are there for a long time, and we'll talk about what they look for. And then you also have guys that are very speculative in nature. They're there for a short term to make money, to take high risk, and they put everything in.
And don't forget passive investors. So you must add three there.
Correct. And what that does is a lot of people they don't understand how people play into the space. So what I mean is you might find someone that's here as a speculative person, and a speculative person is someone that buys something today and they
Monday they sell it.
Yeah, they're purely holding it for a short term period. They're trying to buy when the price go up, they sell when the price is up, and they cash their profits and they move on. And obviously someone that's long term is someone that says, okay, why am I buying this stock? I'm buying this stock because this company is reputable. It's got stores all over the country. Their profit is good. They employ so many people, blah, blah, blah. So they have fundamentals and they can hold it for a long period. And I think we actually never really discuss, but those two people always clash. And sometimes when someone is giving you advice, if you don't know yourself, if you are a long-term investor or you're a speculative person, you might actually be getting the wrong advice from a speculative person. When you're actually a long-term holder.
Yes. So it goes to who's risk averse and who's not.
Correct.
Yeah. So the guy who's more long-term is more fundamental. They'll take time. Yeah. They'll do the research. They will dig deep.
Yes.
They'll pull a cash on you and ask questions.
Yes.
Deep down inside. And then there are people like your teaser who'll be like, fuck it up. Sorry for swearing, but like, I'm just going in.
Yeah.
Like, here's 100K. I'm going in. I know whether I'm going to make 150 or not.
Took the risk.
Yeah, I'm taking the risk. Those are your short-term guys, speculative guys. And then there are guys probably like me and any normal person will be like, you know what? I'll just be passive. I'll just invest. I'll just trust whoever to just put it in there for me. And I'll believe them if they say they'll return above inflation.
In whatever period of time.
Yeah.
I think to that point, I actually want to speak to the passive investors because Tisa made a good point that most people don't have the time. If you've ever a full 9 to 5, which does not accommodate side hustles.
Those are passive investors.
They're passive, right? Yeah. But here's my thing. If you're a passive investor and you want to entrust everything to the person managing your money because you will trust them to whatever returns they promise you. But here's the flip of it. You can be a passive investor who's still more involved because here's the thing. From a time perspective, if you're saying I don't have enough time to start a side hustle because it's too time consuming, right? But it's less time consuming to allocate however much time you want per day, per week, just to keep probing your investment, doing a little bit of, even if it's just high level research. The starting point I like mine is to say, ask yourself what kind of risk, are you risk averse or are you a risk taker? Once you have that, then you say, okay, look, then my philosophy is, look, if I want to make quick returns, I'm more on the speculative side. But what I want to highlight is both sets of investors, if you're saying, look, I don't have time to start another stream of income that involves me doing things on the weekend or after hours, then you can sacrifice the time to move away from being your blueprint passive investor. You can put time into, even whether you're long or short in terms of your investments, put time in just to researching, probing, or asking questions. And like Tisa rightfully said, some people don't know that you can ask. The person's asking. Most of your brokers have your contact.
As much as you are passive, you still have a responsibility.
You still have the onus is on you.
And my fundamental with that is always remind yourself that I think we all work hard and sweat for our money. Our money is losing value, so it costs you nothing. And in essence, the onus is on you. If you feel just the urge, brokers they give you their phones for a reason. Pick up the phone, just ask him. Even don't ever I don't shy away from, like I say, I don't have the answers. I've got no problem asking, even if it risks being laughed at. So I'll say, layman's question, take that approach because this is your future. It's in your investment and your money. If it's anything on any program, anything that we might say, and you just want clarification, any good broker, whoever is managing your money, will allay any concerns that you have. So you find the more you get into just the habit of researching, reading articles, listening to podcasts or spaces, radio shows. Just build up your knowledge base. You don't have to become an expert because you have the expert managing your money for you. But you find what you might come across in terms of your investment philosophy or approach, you might deem yourself a passive investor, but if you have maybe the teaser spirit, like some of us, we like sports, we're adrenaline junkies. Obviously, not to gamble with your investments, but if you think you've got enough information, you've done a bit of due diligence, and think, you know what, you'll be able to shift from not your entire savings or investment, but maybe let me take a calculated decision.
You'll be surprised.
Take a calculated decision.
People change jobs and cash in their pension, chief.
Take
a risk.
Yeah, take a risk. But yeah,
You'll be surprised.
actually,
We've seen a lot of government people drain.
Yeah, we've seen that, and now you're looking for a job in your retirement years. Yeah, so but it's true. But I think what I was just trying to say is, the more you empower yourself with information, you could probably find, you know what, if someone's giving me a guaranteed return as a long-term play, but the return is lower, I get more information. I can take a portion of that saving and saying, not put it into this investment vehicle where it's more short-term, bit higher risk, but I've mitigated my risk by not moving my entire portfolio. I'm taking a percentage, and this decision is not based on the fly, but it's based on what I've been listening to, the questions I've asked and look, obviously before you make the final decision and give the instruction, you'll be advised accordingly.
Yeah, I must say, man, I attended a webinar during the week with Ellen Gray. The guys were talking about, I found it quite interesting, but they were talking about their investment philosophy. So there's this guys, all the guys, you know, they also have these ETFs and they bundled stock. And the guy that heads it up was explaining that it makes him sound like an old guy, you know, like he doesn't like this new sort of
NFTs and all of those
companies,
things,
you know. He's like, I don't invest in Tesla. To me that doesn't make sense. Like, Tesla stock is going up, so to me it's like, go go take the risk, take the upside.
So he's more like old school.
Yeah, but what I realized was he then says, you know, he invests in everything that he trusts fundamentally. So he puts a model, he puts the numbers, compares everything, and he does all of that. And his packages of his ETFs, they are all fundamentally good. It's almost like the Warren Buffett approach. Process.
Warren Buffett kind of style.
Correct. Yeah. And it was quite interesting to see that, you know, obviously the equities market is down. But his ETFs are performing way better than the
top
most,
40,
you know, because the most have the high earners, so to speak. So it was quite interesting to see that there's actually people that are fundamentally looking after their portfolio classes, and they make sure that they actually have integrity with it. And to me, that then asked me that question, like, shit, I guess I would never invest in this because I'm more of a risk taker, you know what I mean? But it was quite good to see, you know, when I look at my risk investments, they're all down.
Of course.
They're all down, you know what I mean? And here you are listening to someone say,
I don't want to expose Caesar, but if you look at his this guy's got like, the stocks that he has. I'm like,
to your point, it is actually a good point, because I think.
But when he's up, eh?
Yeah.
And you'll hear from him, he's up, eh?
It's like Kanye, it's up. Yeah, but I think that is actually a good point to say, like, for someone who's probably going against the grain, like in terms of his approach, what's interesting to note is that what tends to happen with investment is the crowd normally go with what we can see at very surface level. Say, look, these are your go-to. If Teslas and certain stocks are your go-tos, the masses are going to run to those.
Correct.
But I think the gem is really, like, once again, like Maza joke, the research and digging deep.
Also, you can't beat fundamentals.
You can't beat fundamentals.
I think with anything fundamentally, if it's
a strong lesson to learn.
If it's sound and solid, but I think it always then just comes back full circle to being honest and asking yourself, what kind of what's my profile appetite in terms of my investment? Because for some people, I totally understand a teaser, the long play, at some point he'll get restless. You know, this is taking too long. I could have moved and made X amount of percentage return had I invested in this. So you ultimately want to be comfortable and safe in terms of how you invest and manage your money, because it's such a good point. If you don't know what your fundamental approach is, someone who's going to advise you, who's a long-term person is giving you the wrong advice. And then that leads to the frustration of you haven't told them upfront, like, no, I look for quick returns. And then there's that disconnect. There's a disconnect. So that needs to be addressed, and ultimately continue to circle back to what Miles was saying. It starts with the person, which is being you, because ultimately the fund manager of these firms, is solidified as they are, they probably at the core, they're not as vested as you are, as your own money and whatever your future visions, whatever.
He's making fees, even if it's red. Yeah, no, man, 100%. Yeah. So maybe just before we wrap it up, it was a big week to this week with everything else we've discussed. But there was also another thing that happened that was quite interesting. Is South Africa got Disney Plus. Maz has been very happy since then. You know, he's been waiting for this. And
so my friends were looking forward to the Marvel universe.
The funny part
I'm a
is
huge Marvel. I'm a huge Marvel fan.
Like I've got I'm on a WhatsApp group of TV geeks, and they were really, really happy. Obviously, it launched a few glitches, but I think I just looked at that whole thing, and then few interesting articles, because obviously for the longest time Naspers stood DSTV. They still have a bit of a monopoly stronghold within that space. I think they challenge pricing wise. Do like the pricing for Disney. It's not just Disney Plus. They also have Hulu under the umbrella. They also have like your FX and other platforms. So you are getting a wide range of content, because I think all these.
What is it? 120.
Yeah, I think it's actually 119.
119.
Yeah, so 119 Netflix, the premium one.
They don't have like full HD, blah blah blah, like Netflix.
I think.
But the one thing I can, like Cash is saying, there were a bit of glitches, like unlike Netflix where you can just watch on full on HD, whatever. But with I tried to watch thingy again, Deadpool.
Yeah.
And then I had a bit of glitches there and there.
Yeah, I did see quite a bit on socials where some people were trying to watch, like, exactly, they were getting error messages, and I think they were kind of slow to update users. But look, their catalog is really immense, because
I love their catalog.
yeah, like it's like, because I
Their
think
catalog is top tier.
what
they
they
have
did,
Boston Legal. Danny Crane.
you know, teaser so Boston Legal is like, I'll see you boys next year.
No, for me, when I got geeked is when I saw their pricing, and I saw that they've got FX, because FX got a lot of great shows I love, like your Atlanta, your Snowfall. So you know, also they got Hulu. Hulu's also got some great documentaries. But I think what we're seeing in this streaming space, because I'm huge on just the media, what we saw like a couple years back, because streaming really started taking off, between the competition between Amazon Prime and Netflix, they started pulling off a lot of their content on Netflix in the back end. We didn't know why, because for us it's frustrating why, like, I like a lot of the Marvel stuff, Luke Cage, Deadpool. They
used to be on Netflix, now they're not there.
Yeah, it's on Netflix.
They're not there anymore.
They basically, so in this race for like the streaming, and I think I'll maybe touch it towards briefly at the end, is what we're seeing is now, because there are a lot of platforms at the latter stage, your public consumers are going to have to make a decision in terms of who to go with, because now what you don't want is to have on your streaming box or your phone is a lot of apps.
How many do you have? How many streaming services you subscribe to?
So I'm subscribed to Amazon and Netflix, and actually want to join Disney Plus.
So it'll be the third one.
That'll be the third one. Apple Plus, I thought of it. They've also got decent content, but I just thought, like, how am I really going to watch all this stuff?
Are you on DSTV? I'll ask now. Are you on DSTV?
I'm on in codes because I'm one of those people.
Showmax?
Yeah, actually now I've got someone's logins, I've got the app.
Okay.
Yeah, so it's like a lot of people doing so.
Yeah, you were not happy in April. No?
Ooh. Trust me, yeah.
So Zit, how many do you have?
So I'm one of those. I've got DSTV, Showmax, Amazon, Netflix, Apple. I've got DSTV, Disney Plus. I'm looking for Hulu now.
Yeah,
so you're on 6,
I'm on
including
6.
DSTV.
But you will get Hulu content on Disney Plus.
On Disney Plus.
Yeah.
Okay.
And
So is it not crazy that it's starting to feel like if you were doing this trying to replace DSTV, you're about to pay the same price?
that's a very good. And here's the kicker with that, because I listened to another platform and they were talking about exactly that. Where it feels, they are saying it feels like we're going backwards. We've got DSTV, but in America, it's like they're saying we're going back to the days of cable. Because with cable, you'd subscribe to so many channels, so many platforms, and it didn't make sense. It becomes actually a job to manage. Okay, I want to watch WWE. It's pay per view, so I have to actually pay for this one event. And then what am I paying for month to month? What am I really watching? And I know there's like platforms like Plex where they let you aggregate all your apps under one under one app so that you have to like sign in and sign out or just switch between. But the challenge now also is like if you bring it home to the South African context, one price wise, if you like in Miser's case, if you put ultimately remember once when DSTV was approaching 1,000 rand a month, that's when the consumer was like, this is getting ridiculous. We're not getting a lot of new content. It's mostly repeats, the price, and people started switching to Netflix. But now with all these, having to subscribe to all of them, it's now negating that, number one. And number two, the challenge with streaming platforms is data penetration in terms of the price in South Africa. Data is still quite expensive.
Yeah.
You see now. So if you think of, there's also the other smaller things, like I think sports has always been the biggest draw for multi-choice in terms of watching your PSL, a lot of the local content like Mzansi Magic and all those things. That's the draw they have. So a lot of people, you'll still have your DSTV for certain demographics or people within the household. So now if with mobile data not really coming down at the rate the consumer would want it to, because the streaming platform are always going to have that challenge of, okay, each person, with every subscription you sign up for, you aggregate it. Not everyone, Wi-Fi and fiber especially, those are privileges. If you're looking in the context of the average citizen, and then we then look at, I'm just thinking long-term play, as more competition is ramped up and there's more of these guys spring up, ultimately, at the end of the day, how much content can you really watch? Because you're right, we're actually, in terms of price and what you're watching and the price, we're almost going back to the DSTV scenario, because DSTV grew, gave us a big offering, but the price is what made people want to switch to other platforms.
Yeah, because I actually want to ask you, do you think when people were creating, Disney Plus, Netflix, do you think their aim was to try and beat cable TV or multi-choice?
Of course.
Or do you think their aim was to rather satisfy consumers' needs? The need was you want to watch something when you want to watch it. Mm-hmm. You want to watch it in good quality, easy. And you want to watch it whenever you want. Whereas TV never used to give you that. Yes. You used to watch it 8 on Sunday,
once
on
a week.
Thursday. Mm-hmm. So of course, maybe they wanted to beat it in that perspective, but they were actually trying to get to you in
a way
in your habits more than actually beating multi-choice.
Yeah,
it's a two-part, of course. It's a two-part
bit of both.
answer. Yeah, they wanted to beat the guys, and now it goes back to this artificial intelligence. They wanted to learn your behavior as a customer, as a consumer.
That's the selling point that they had really over like your standardized TV, which is packaged to you. This is when you see it. This is when it comes on. What the real strong point for them, the USP, if you want to call it, for the streaming guys is, yes, they wanted to beat these guys. That's a pure business decision to make money.
But now they have time to learn about it.
But now with algorithms and the way I think the proliferation of social media in enabling companies to really understand their habits, your viewing habits, your interests, that then filters into them, even which advertisers do we want on our platforms, because they can really customize. They can really get to the nuts and bolts.
Of course, the
data's there.
Yeah, mining data makes sense.
Yeah, so
it's all about data analytics now.
So it makes sense, but I think you are right in they probably considered both sides, but for them in terms of as a platform that is offering content to viewers and subscribers, the ability to which they can really push customization is probably what drove a lot of you think of you see it with some of the studios and who they're partnering with in producing their own in-house series, because in the beginning there was a time people were fighting for content, so we're going to go buy the whole Friends catalog, we're going to go buy this from here, and then people also taking back their catalog, say, look, that also what drove them to say, look, if Netflix is getting so much viewership from our content, let's buy it back.
Yeah, their share price is shit, by the way.
Exactly. And then over and above that,
thanks to Disney.
But see, now I think I think Netflix might have been blindsided by not really seeing how much competition was going to come in that space real quick. But it made sense for people who own content to say, look, if we have the resources we already have a catalog, buy back our own catalog, number one. Number two, start producing, because that's the other thing that conversation-wise that's really helping these platforms in the streaming race is the fact that a lot of them have the resources to produce new shows. So it's not just back catalogs. The back catalogs are really great that, like, for example, you can watch Boston Legal start to finish. You get to binge it when you want. Multiple users on one account. So all those little bells and whistles that people really like. But I think definitely, if I had to guess, I'd probably say a huge chunk of that decision was probably, let's give the people what we want, obviously getting profit in the process, because their business is ultimately.
Yeah, but I also wanted to say, yeah, maybe my final part would be in thinking, at least in thinking. Like Mazza said, he's got 6 subscriptions. He's probably paying more than what DSTV was.
Yeah, ultimately, yeah. If
You know what I mean?
if you combine all of the subscriptions,
Correct, yeah.
and if he's got the top end, because you probably everyone you want the 4K, you want multiple users on every account. So now you're right. It then does it then the justification that was before of I'm leaving DSTV because it's now expensive.
Yes.
That's now gone out the window.
Correct.
And
So
then you factor in the value of your money. You don't really have that. The average consumer who has those services, is it now really a necessity to have all these accounts when your money is losing value? The cost of living is going up. Those are some of the things you start to scrutinize because ultimately those are luxuries if you really think of it.
no, I mean there are, but I guess for me is if you actually cater to someone's need, you might actually make more money of them than you will, this is making more money than DSTV for me, just because they managed to cater to his need.
Yeah, look, I think from just over the years, I used to see a lot of articles since, especially when I left DSTV. I think when you look at sites like My Broadband, with open common platforms, this was also the one main critique of MultiChoice's approach. Of course, it's the old model of TV and how they give you your content, is the fact that people felt that it was not really catered to. They obviously tried to invest with different packages, price drops, adding more channels for African content, kid stuff, but ultimately they could only do so much. Whereas the streaming platforms, like you're saying, they took it a step further, and for them it's more lucrative because they will have you teaser as a long-term client, because to the T, or for the most part, the content that they're giving you, the way it's presented to you, the access, the ease with which you can have it, multiple accounts, multiple users, they're going to retain you long-term. That's why even when Netflix was starting to take off, even before Netflix launched in South Africa, you already saw MultiChoice pivoting and launching with Showmax and the streaming and the app. Had a few glitches, but they gotten better. Still room for improvement, but it's almost, my only challenge was with them, with DSTV. I think what DSTV always have is just the fact that the way they're set up with the conventional satellite dish and the price of data, like I said before, that will always give them a stronghold. Local sports, and part of their catalog, the international platforms won't have. You're not gonna have your Mzansi Magic kind of content on a Netflix. But Netflix also, you're seeing, they're also trying to close that gap by, there's been a lot of content
for production houses.
Sell
to them now.
Yeah, so now you look at like a lot of the documentaries that are now, a lot of actors and media houses are produced. There's a lot of local South African and African content that's been produced over the last couple of years that's on Netflix to try close that gap. Say, look, we're not just going to give the international.
Yeah, but I must say, man, like I think going for satisfying that need is very critical. Mahuta is here. He knows he loves basketball, and
big time.
And it's only a matter of time until he gets an NBA pass. You know what I mean?
Yeah.
And at some point, you're gonna pay whatever they ask, because there's a thing about satisfying the need.
Exactly. Like,
you know what I mean? Like you will change everything else in your budget to do that thing. Like,
especially if you really like if it's funny you mentioned that, because people really like soccer. We always know that there always be a big draw for any platform. Like people go to great lengths, even like the bootleg streams or whatever. But that's why like now you see it I've seen with the NFL, like even their highlights on YouTube, they're for free longer. NBA with their league pass gradually over the years, it's really like come down in terms of price, because they're saying, look, there's some people, they know that there's some people who just want to watch the highlights, but then there's people like Neo, Spuda, Mauta, who they want everything over and above the game, the interviews, commentary, and like build up, after shows. So some of the shows like from ESPN. So if a decision where if I'm gonna get a league pass and I'm only paying $15 or whatever, but because I really want that, I'm gonna pay for it and it'll be worth it. And now because I'm not limited to just a set-top TV streaming company. If I pay that NBA League Pass, any device that I have that has access to the internet, there's half of these smart TVs come inbuilt to the app where you can download it, put it on my phone, put it on my set-top box, or wherever someone like Mahuta is, he will have access to his League Pass. It's a once-on sign-in, and then with that catering, it then makes people will then sacrifice to say, okay, look, this I really want, and I'm going to keep this. And if you look at like the one that's always come constant when these discussions come up is people have always said, like for the children and for the ladies in the home, that's why DSTV is always going to be there, like especially with the children and cartoons. But now you find a lot of YouTube kids, Netflix, like with their own profiles that have, and
Disney Plus.
Disney Plus is they've got
They gotta pay us for this promo.
Can I also add something before we wrap up? Something that's up in the air. The F1 wants to bring the Grand Prix to
back to
Kyalami.
Back to Kyalami.
You guys can sleep at my place.
I thought you were gonna rent it out to the world. Cause
you see Jesus that kind of guy.
Airbnb.
Yeah. So I don't know if this is true, but I was actually in a conversation with one of the gents the other day, and then I actually asked why is it not here, and he tried to explain. So if F1 comes, it's gonna go to Kyalami.
Of course.
There's a racetrack. It's a world-class racetrack.
Isn't it owned by
Our neighbors?
Isn't it privately owned by Porsche now? I'm assuming to be through
The Kyalami racetrack.
Yeah.
Yeah, I'm sure that's not publicly known.
No, it is.
I'm not sure.
No, trust me, it is. They bought it. Yeah.
Is it owned by Porsche? I'm not sure.
Yeah, they bought it a long time. Like I'm a car geek. That's out there in the public. They bought it a long
Maybe
time.
not Porsche, but the guy that owns the dealerships for Porsche.
Oh, okay. Porsche is Porsche.
But that's a quality racetrack, man. It needs to come.
I wanted to say
historically,
to you,
before when Formula One was in South Africa, it was always at Kyalami. Like there's even a former Formula One champion. He was from South Africa, world champion, and I think this was the tail end of it being in South Africa. But back to
but you know why they didn't come? It's because obviously it's a big team. You know, I think any car has probably 150 staff maybe.
minimum.
Team,
you say?
Minimum.
Yeah. So that's a lot of people, and obviously there's 20 spots, and then you do the numbers.
Yeah.
They need to all have accommodation. So we didn't have enough world class.
Back then, Kyalami was not developed.
Yeah.
Compared to now.
Yeah, we
Wait,
didn't
what?
have enough world class accommodation to accommodate them. They want everything 5, 6, 7 star actually. They want 7-star stuff. In South African terms, maybe 5-star.
Yeah.
But we didn't have enough of that, and other worlds do. Cause I mean, this is a very, very like moneyed sport.
No, trust me. I'm
Sport.
a Formula One
Because
person.
think
Even
about
if you
it,
watch the
the
series,
reason why it needs to come, there's enough accommodation now in Midrand as a whole. Like Kyalami, Sandton has grown.
Yeah,
Enough.
Waterfall. I mean, Waterfall.
There's
Yeah.
that's what I'm saying. Midrand has grown in terms of Waterfall, Kyalami, and Barbecue Downs, and all of those places.
Yeah.
And then
But
Sandton,
are they 5-star though?
as about to say, look,
Sandton and Waterfall are.
yeah, but I'm
Sandton and Waterfall.
surprised at that. But look, it kind of makes sense because look, I follow Formula One religiously. Even if it's the Netflix series Drive to Survive, it's exactly like you're saying. Those teams are huge. I mean, like the reason why some races are staggered 2 weeks between, they literally they call it a upper echelon traveling circus because the teams, the tires, even even the trucks that carry the cars are iced out. Everything about Formula One. I think the running joke with the last Formula One in Miami is the fake marina that they had at the new Miami Grand Prix was they were trying to emulate the levels of Monaco. So they put like boats and there was no water there. But also obviously because it's like it's such a high-end sport, the money in Formula One is crazy. That's why you find like similar to the appointment of World Cups or choosing where the Champions League final is,
World Cup is something else important.
yeah, but to Tizo's point is they definitely consider facilitations of do you guys have like the level, because everything about Formula 1 is just top notch. Even like in America, there were jokes, even on one other, they were big in the jokes that only like the celebrities, the who's. You even see like in just the pit lane, oh, there's Will Smith, he's waving the checkered flag. Everything about Formula 1 is top notch. So look, if they want to bring it back, it would be great. But also, just I think business wise, it does speak to there are opportunities. But I think it to go back to why they left originally, which I'm still a bit.
It was the better alternatives. I think now South Africa is at a place where we can host it.
We can afford to host it.
There's enough to accommodate their need.
Yeah.
Because that's how they usually pick a place. You know what I mean? There's not a lot of races, but they got to pick across the world. You know what I mean?
And they factor in their calendar, facilities, time of the year.
I mean, like that's what I'm saying. Like I'm not that I'm campaigning, but like there's enough accommodation, man. And Kyalami and Sandton.
For the viewers, I think you can clearly see where Miles is.
We heard you.
He's punching his neighborhood. But I look. Yeah, but
I'm campaigning.
That time you were host us instead of making dollars, you know.
I think as a man who's been recently promoted,
it's okay.
he's pretty safe.
Yeah, it's okay. It's okay.
Things are okay back home, but I think it would
He's passive about it.
Yeah, he's
I'd rather invite my friends.
Yeah, but look, look. I think personally, for motorsport and just for motorsport fans, it'll be great to have like Formula One come back to SA because just the area, the business, it's a draw. I mean, like if it would be almost like a yearly, like look at what 2010 did for the country.
It's gonna be so funny. It's gonna be so funny that he's like, I didn't sleep, man. The noise was too much.
See, that's the
And they're gonna go and have a presentation the next day. Like,
and if there's one
these
thing,
cars are just going on.
if there's one thing I can tell you, Formula One cars are loud. Forget the people who sit close to the airport or train stations. Those sounds have got nothing.
I'm literally. How much is it? Teaser? 2 kilometers away.
Yeah, that's what I'm saying. It's gonna be so
Literally
funny.
2 kilometers away.
Yeah, trust me. That weekend, you'll probably like it for the first few editions. And
I'm probably gonna be annoyed that.
picture Miza being like Miza and the people, because Kailam is also equestrian horse owners area. Picture Miza being part of a group now campaigning to have Formula One banned because of the noise and the Residents Association. And this is
I'm gonna be there and be like, this noise too far, it's too much.
Yeah,
But this is dope, man. Yeah. Thanks, gents. I think maybe let's wrap it up here. Any final words from you guys?
I mean, from my side, I mean, like, let's do those. On a serious note, let's do those scenario analysis. It's not difficult. Just test what you need to do.
Yeah, for
Just
now,
test what you can afford.
maybe expect 75 basis points or maybe 1%.
More interest rates are
say
coming.
1%.
More interest rate hikes are coming.
Yeah.
If you can save wherever you can save.
And make sure that the people that are saving for you, you understand that they match with your investment.
I mean,
profile.
like, if one of the things that you taught me to is that cash is king. Like, if you can be able to save cash,
he's
save
here.
as much as
He knows he's a
liquidity.
king.
Yeah.
Look on my side. The last thing is, I think as a platform,
They missed it. Cash is king.
No, I know. I was trying to the fake humble. When you watch it back, you see my chest pop up, but trying to play it cool. Business podcast. Let's be civil. But I'm like, yep, cash is king. But I think I was just trying to say, in closing, look, Jens, great discussion. But I think what we're gonna continue doing with this platform is just unpack and give information that across the board will be beneficial. But look, if you have any questions, anything that we missed out, look, please do hit us up on our socials. Just DM us any question, any more over and above. If there's any particular burning topic that you'd like us to cover or come back to, look, we're more than willing. Just send us the info, because ultimately that's the reason why this platform exists. Is you find people are experts within their various spaces, but there's always going to be topics or subjects where, like we say, everyone would need more information, and that's what we'd like to do: research, discuss that, and even if it's at a very high level for the average person, just to get an understanding of how this affects you, what does it mean, and how can you make informed decisions. So that's probably so that every time now there's an increase in the rate, inflation, you kind of understand what's happening in the back end without necessarily having to be economics or a PM expert.
And I must say, man, and I think it's funny, but one of the things that people used to ask me, what happened to property coin? I'm like, I can't keep telling you what you should do when you buy your first house.
Yeah,
we said it once. Yeah. The episode is there. There's enough content out there, and there's a lot to get to for me. So
we can only tell you we can only discuss rent versus buy so many times. The content is there.
Yeah, bro.
Sure.
So yeah, and I must say, man, but thanks, guys. I think maybe just to reiterate again, try to take care of your money, because it is losing value. So you have to actively look after it and make sure that you can get the best out of it. 2 is, maybe understand yourself if you're an investor. Even if you're not an investor, it's always important to understand yourself, so that it allows you to make decisions better. So maybe understand your investor profile, your risk appetite, etc., because those things will, and you will see, like I said, on the episodes that are coming, we're gonna be presenting these opportunities that, often will require you to maybe identify yourself, so that you can tell if this is for you or not for you. You know what I mean? So that's quite important to kind of get to understand yourself. And then and then lastly, thank you to everybody that's listening to us, man. I'm
thanks,
really happy.
guys.
I'm really happy about this. Shout out to the No Hidden Agenda Media. This is the second podcast under the umbrella. And I hope that we can grow and do more of this stuff. And after this, we're going to talk about, manega. Can you believe it? Yeah. From Rent to Lucas Raps.
From Rent to Lucas Raps.
I like that. Great. So
I'll be promoting the property, the Poiki pod behind while the guys are talking
that's
about.
on you, buddy.
While the guys are talking about Lucas Raps.
all right, great. So look, as always, this content, Business Agenda podcast, will be available on YouTube and all your audio streaming platforms: Apple, Spotify, Google Podcasts. And one last thing that Tizo would like to say.
Yeah, I want to ask you, Tapo, should we? Maybe we should. Now we should start to put them out as well. Short by blah blah blah.
Yeah, promote
all
the
that stuff. Yeah.
Yeah, I think we should, because people are interested in his work.
For those who are watching, the man behind our amazing visuals, I think
He also has a stage name, eh?
Oh,
hey,
I think we did.
oh,
Yeah, I think
hey,
we did putting that out there. So look, if you want more information on this man's services, please just do reach out to us. But the man behind the visuals on our YouTube channel, like we said at every injection of this podcast, subscribe, comment, hit the bell notification icon every time we upload or drop an episode.
Already we've got a few inquiries about him already. So maybe we'll stop dropping names once everything is just final. But people are interested in his work. I mean, he did a brilliant job. I watched a YouTube. I mean, it's brilliant. I mean, I'm so impressed.
Right.
That's why I decided to dress up. I know I'm gonna look.
Great. Thank you for watching, and we'll catch you on the next episode. Cheers.
Cheers, guys.